Good morning and welcome to today's More Important Chart Analysis videos on Monday the 20th of August with me, Richard Perry, Market Analyst at Hantec Markets. We've got a fairly risk positive move today, although it is interesting that we've started to see the dollar is regaining a little bit of ground. Look at this move that we've seen on equity markets today. Just pulling nicely higher. Actually, you had a decent close on the S&P 500 on Friday on Wall Street. We saw the markets just regaining a little bit of that upside initiative, and the futures are ticking marginally higher as well today. So that's helping all this rebound in equity markets. Suggestion is that the US is going to be meeting China and doing these low-level talks for the trade dispute this week. And it's taking the positives out of that, although I'm not convinced that that's going to be a real bottoming of the market. So I think there is a further opportunity for this to sell off once more. But the dollar has regained a bit of upside. Interesting, ticking higher on the day, and that's come as the Chinese yuan, the dollar yuan rate is also ticked higher. You're not getting anything on yields at the moment. Really are very quiet on the yield front. However, it is interesting that we are still seeing the flattening of the yield curve. The yield curve, these spreads, 2s, 10s and 5s, 30s, turning over again. So that is interesting. The market's still looking at that as whether to get worked up about it or not. Not seemingly quite yet. Trade tariffs seems to be a bigger issue that the markets are having to deal with. Subsequently, the dollar has regained a bit of strength today. But aside from that, interesting move on gold actually. Dollar regaining some strength, but the gold price has actually ticked higher. It's in the technical rally mode, up $28 from the low. I'll talk about the technical implications of that move, but again, probably a selling opportunity around the corner there. But the dollar is once more the main issue that we face today. Now, no major economic data out today. Very quiet Monday. But my chart today is the French CAC. Now, we've been looking at equity markets in Europe falling away in the last week and a half. However, it has picked up off the lows, this French CAC, and it's now starting to push through some resistances. It's the initial resistance pushed through into Friday. For most of Friday, it was above the 50% fib level, closed around that level, but ticked again higher. So it's reopened the 38.2% fib at 54.21. Interesting that the market has sort of hit that resistance around 53.85 and just sort of backed off a touch today, just a handful of ticks above that and then falling away. So that's a gauge to look at very near term, but the 38.2% fib level could well be sort of the next destination for this rebound as we're sort of pulling away from the 50% fib level. Market has ticked higher on the momentum indicators as the stochastics are edging higher, the RSI above 40 again. But I just look at this and just think, well, it's still sort of under pressure, and I feel that the DAX is generally under pressure and is going to be sort of retesting the June supports. And I don't really see this CAC 40 chart as anything really different. It might end up playing out as a part of a range play over the last few months, but within that range, you'd say 38.2% fib is actually a bit of a pivot. Has been used fairly well as a bit of a pivot, so I'd be thinking about that as your sort of gauge near term. If you move decisively above 38.2% fib level, then you're looking more positive again. But I think this is just an unwinding move within this sort of you could argue range, but yeah, at the moment I'm still seeing that this is a little rally that's likely to come under pressure once more. So let's have a look at the hourly chart, see if that shows us anything really different. There's a slight sort of air of a negative bias looking at the MACD lines on the hourly and the RSI as well. And if this, as I said, starts to sort of find the basis of resistance, you've got that old support to become a bit of a resistance today, 53.85. But you'd really need to see it above 54. Let's say 54.48, 54.50 area to really start to suggest that this is a recovery in the offing. and again that would be decisively above 38.2% fib. So it does seem as though that is a level to watch now near term. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.